It's a good morning. Let's start our live. As you can see in the economic calendar, we have welcome back to my YouTube channel. It's London session. We're going to kick it in. As you can see in the economic calendar, we have news, but these are late hours. We're going to try to be live at these hours. The Australian dollar, they have the CPI, and then NZD, they have there. We're going to see if we will catch move during that session, but as our normal routine, it's London session. It has just started, and I'm going to take you. That was the economic calendar, to the news, to the chat side. Now, I'm generally bullish. Let me mark buy side liquidity. But let me delete everything so that you can. Oh, it's just 3 candles to show what 3 drawings. We have that these A swing high, those are our buy side liquidity that you want to work with, and that other buy side liquidity. On top of that buy side liquidity that I've marked, you see it's a fair value gap. Let me zoom it. You see that fair value gap here? That I want to see price coming there today or tomorrow. I'm generally bullish. This black line is the midnight opening price. You see, I'm generally bullish. There is no anything that is telling me we're going down here. My bias is bullish, and we're going to wait for that thing to happen. Dropping to the 4 hour. In this 4 hour, you see this price came to the fair value gap, then rallied up higher. This in this 4 hour, you've seen it. Let me use another color. The price create that swing high, then price sweep it, then declining lower. This daily swing high, that one that I'm targeting, also this one very balanced. It has not been balanced. It's fair value gap. So we have a lot of price liquidity according to our bullish. You see this price hit the move down with this to this sell side liquidity, like the bearish move was started here after price swept the swing high, then started declining lower. Now we're targeting this swing low. Or an SMD. Let's look at the one now. Or an SMT. That's 3 on Monday at 3. On Monday at 3. See that swing low also in the euro. The XY, see that is SMT. Is that an SMT? It's 3 AM, it's the 3 candlestick. You see, it has swept that high, it has in the early, the DXY it has the high when the Great British Power has not made that, not swept that same high. So that's an SMT. At the same time, it's inside that fair value gap. So those are those entries that you'll want to enter with an SMT. Like looking for a market structure shift to the buy side liquidity. You see, and I told you we are targeting these highs. So this is an SMT. You see that 3, it has swept in the EURUSD. It has done the lower low, then the higher high, but in the Great British Pound, it has not made a lower low. So you might want to look for maybe a market structure shift, the earliest one, but it's going to be based on a 5-minute market structure shift. It's going to be based on a market structure shift in the 5-minute. Then what are you looking for again? Now you see there, it's the hourly, dropping down to the 15-minute. There is no, but it's inside that fair value gap. You see, just touched it. You see, touched it. Then looking for higher prices, and you're also below the midnight opening price. So that fair value gap. No, anybody who's chasing price lower, it's like you're gonna die. We're just bullish. The GBPUSD is the one that have bring that SMT. You see. Now if price does a market structure shift from here, that's this market or create a high. See how price is going to fool people that it doesn't say that no. I'll trust the 5-minute market structure shift. I don't want to drop down to the 1 minute. Now this is to teach you that if price happens in the if price action happens in this bigger time frame, it's if what I expected has been triggered in this bigger time frame, now and only, and that time it's when I'll want to drop down to maybe this 1 minute so that I can look for a smaller time frame. No, that's the most precision thing that I just learned on myself. You see the same swing high in the 5-minute, also the same swing high in the 15-minute. So this means that SMT, like smart money, are inside this move. Now I'm going to give a couple of bullet points, and you see this 5-minute, if price action sweeps, in fact let me put an alarm there, like an alert, an alarm. Now if this is triggered, let's look closely. There is no swing high, no swing high, no swing high. This is the swing high. If price, this is the 5-minute, anytime a swing high is created or even price goes to this sell side liquidity, which I'm not expecting price to do that, but if price sweeps this, or if a swing high is created, I'll always mark that swing high, and if price does a market structure shift to the 1 minute, if price does a market structure shift to this 5-minute, now I'll drop down to the 3, look for a fair value gap. If there is no fair value gap, I'll drop down by 2, and I'm going to mark the, yeah, you see it's the 5 pips even to that. Now let's see, let's come here to the 5-minute. If this alarm is triggered, we are back to the markets. we conclude that the market structure shift. If there is a fair value gap, we will enter that fair value gap, put our stop loss below this low. If that is only when price has swept that this market structure shift below the low, then actually enter by targeting our buy side liquidity that we mentioned earlier. These are buy side liquidity. These, you see these sweet buy side liquidities. But let's watch price. Let's zoom it here. I'm not going to enter or participate in any entry until I see a swing high that is broken to the upside, then conclude that the market structure shift. If anybody wants to tell me that we are going to continue selling, I'm not going to participate in a sell today. My bias is bullish, as I mentioned it in the past 2 weeks and months. And let's see. If price doesn't happen, we'll just walk away and wait for tomorrow. Let me show you the economic calendar of tomorrow. You see this? Today on the 26th. So on a Tuesday, we have the Australian dollar CPI, GBPUSD. And another thing, you see, during these times, these are the volatile times of these markets. There's something that I'm learning, that you see this CPI. So this means during Australia, if you trade the Australian AUDUSD, if you want to trade the AUDUSD, these are your markets. These are your markets and these specific times. So in our local time, this around 9:30 so PM. So during nights, if you will be trading Australian dollar and NZD, the 9, this is 9, 10. If you want to trade them, these are your markets. Let's see if that is true. Now, what I was going to teach you, I'm going to show you tomorrow, Wednesday. Okay, there is no news. Yes, but Wednesday is no news, but there is small news. There will be liquidity Wednesday. These are those Wednesdays, they have no economic calendar, but they are best days. Then let this not fool you that you don't look at the markets until this Thursday. No, because you have the economic calendar, you have to stay consistent. You have to stay Monday to Friday, both London and New York. Stay in the charts, appear sober-minded when you are full, no hunger, and well focused. Let's just say with a clean body, when you're focused, you will succeed. Yes. Now let's go back to our charts. You see how that's forming, it's coming like, yeah. So let's say market structure shift. If it makes a swing high, then continue going lower to take out a sell side liquidity. Those might actually be sell stops being run out. If then a market structure shift to the 5-minute, then we look at the fair value gap in the 1 minute. Put a stop loss below it, then see what price does. Because one thing, they are aligned, we are below the midnight price, and it's a Tuesday. And as they usually say, Tuesdays are one of those space days. I can't recall it through my notes, from my notes. Let's continue watching it. Yeah, I know that price will do a market structure shift, but I want confirmations. Even if I'm sure and you'll see price doing it, I want confirmations. Yep, because today price might go more than 30 pips. With this SMT that is happening here, that I don't want to see price coming below it, I want to see some reaction. You see then the euro price is also that before is an SMT price has swept that 3 AM candle around the 3. It's below it. Same to DXY. Oh, what is that DXY? You see that DXY, the 3 in the 5-minute there also. It's an SMT. So it's like going down. Should be the next will be a red candlestick. The next one. So price should be going. Swept it. And like the GBPUSD has not swept that same low that I marked in that's actually intermarket analysis. And yeah, let's see if we see a market structure shift. Hope price will keep on going up higher, then leave this as a fair value gap. But let's watch it. It's actually not even creating a fair value gap in the 1 minute. No fair value behind it, but a possible fair value gap in the 5-minute. Let's see if the entry will be at 225. 225, 235, 245. Yeah. This might make this a mitigation block. This 3-minute. Or also this one. Price not below it, but let's watch it. Check. I'm expecting that to be a good market, but let's see it. I'm not bearish in no way, I'm just bullish. Like in the next 7 minutes, let me surprise that. But I might usually fail to clear that high. But the reason why I'm not going to be bearish is that you see, yeah, this order block, if we were supposed to be bearish, you see this price was supposed to close, not even close inside that order block. This is the last down close candle in both ICT teachers. Last down close candle. Price is not, price actually is expected, so there's a high chance that no, I'm not in any way bullish, like bearish. Yeah, hello. 224. I said 225. It should really sound off the alarms here. We're turning them off. Is that a market structure shift in the 5-minute? Yo, yes, yes. Who was selling short? Dropping down to the 3-minute, the first entry to a fair value gap. That will be our entry. Yeah, let's be patient. Yeah, it has done it. Actually, what we expected. But I want an entry to a value gap. Anybody who is hungry for money, if you follow, you know what next. Prices leaving us. Actually expecting those bullish prices. Prices like going and going and going and going and going and going, leaving us. And it hasn't even given us a fair value gap. Now let's drop down to the 1-minute. Now if price retraces down to a fair value gap, you will want to buy. See it? Let me put that long there. Risk that. Boom, that's an entry to a fair value gap. What are we targeting? Those buy side liquidities. Let's work with this first one. See below the midnight opening. Now this is where we want to see price stopping out this stop loss here. See how price declined. You might want to add another buy there. Yeah. Here. show that massive sell-off. This one was supposed to scare traders out, but these was big pockets that have entered. Now, putting a stop loss there below this low. So this is low. I don't see price coming to it. How many pips are those from that entry? 5 pips. Price has actually dipped thoroughly to it, down to like it. You see also that is inside a fair value gap in the 5 minutes. Let's show you. You see market structure shift, then boom, entry into a 5 minute fair value gap. You see that? So I don't see price below here. That's a 5 minute value gap. You see our price is inside it. You see that there market structure shift less than 5 pips. It's actually 231. Let's see if price will go below again. That low. If it does, that will be the first entry and maybe the last one. Like I'm going to risk only those amount of pips. It's actually telling us, giving us signs that's not a value. It's actually going to reverse to this. But let's watch. Putting a stop loss below here. These are the value gap. So that fair value gap again. This is that 5 minute fair value gap. And nope, it's not a good end. This low is my eye. This low is there on the time to put my stop there and see what price does with it. These are signs that not a good entry. If price is specifically this order block, see? Yes. And to see price taking out this low so that you can validate that I am wrong. See, it's less than for my end here. 5 pips. Let's see, taking out our stop loss. Let's put a swing low here. That green line. Let's see if price. I want to see price. If price comes below that low, now we are, price telling us that you are wrong. It's getting another candlestick in the 5 minutes, so you can earn that again. But let's watch it. This swing low. Let's watch it. Price doesn't take it. We'll be going up higher and higher. Let's see what's happening in the 3 minutes. This was supposed to scare you off. Yeah, but I want to see price taking us out so that I know that you are wrong. But if it doesn't, I'm touching my barons. Two that 7. Let's see what happens in this 2.7 candlestick. It's going to go down to scare us, telling us that a market structure shift, but no. It's actually rebalancing that full fair value gap. See that? We're supposed to skew. But you see this was to scare people out, those who wanted to enter so much earlier. You see this? If you entered here, this retracement would have drained your candle if you were over leveraging. Price will be kicking out. I don't think it's meant to go down. I think it wants to go down a little more. Let's do it in the 1 minute. Market structure shift. See the stop loss price has not even touched it. that this the double candle. Now you see this came to this. Let me mark it. See that other block. I don't want to see price coming below here, but let's watch it, and it will usually continue going down low. But what I want to see, come take out my stop loss to clarify that I'm wrong. Here you see that, yeah, decided to go lower, lower, lower. See buy side and sell side. Now price is like, which are you going for first? In the 3-minute, price has dissipated that fair value gap. That's a good sign, but I want to see price to up high. If it doesn't, let's go 1 minute, because inversion fair value gap, setting prices low. Let's actually see. It's actually 1 hour. So what I want to see is price is going to continue lower to this, take out of stocks here. Price has respected that 1 minute fair value gap, this one. Now let's see if price will actually want to go over to this. Just if it goes, that will be our first and last entry for the session, and maybe call it a session. Let's go back into 1 minute. Yes, it's actually going to decline. You see this order block, the bearish order block, but let's watch it. You see that swing low that has been created in the 50-minute. Price might actually take out that swing low, then now rally higher nicely. Like after this sell sign had been swept, yeah, this sell sign, then boom, but not below this. Let's actually, I'm holding my stop loss. That's actually a crazy thing to do. The price is so bearish. Buy the first retracement to the first. You see, price has declined post 12 AM, then no, I'm not interested in that idea. You see there in the euro, it has done a sell side liquidity with the market structure shift. You see, in the euro. Check how nicely how euro did. Market structure shift in the euro, then market structure shift into a fair value gap, boom, then starts to rally higher. You see, euro is actually running to rally up higher. You see, euro is doing nicely. It's actually bullish. Taking that high. It is even high. You see how it's doing nicely. It's essentially entered into a fair value in the 3-minute. The euro was the one that had good price action. You see? And also remember, there is like no news, so there are no news. So this is expected, but actually this may take a to see price. If price will touch here, it will be a bad day. Yeah, it might be a fake up move. You're correct. Very, very correct. You see that fake up move? Yeah, it might be one of the like giving us a fake up here. Yep, so cheat. But I'm also seeing here in the euro. Euro is actually doing good in buying, but this is what I'm expecting. You see bullish price. Everybody was short. I don't know the price of this. Big one, but I'll stick on bullish price. I don't see price in that low. After this market structure shift, I actually don't love seeing price doing like going that low. Like if it's really a nice move, it's a move that should be like sending prices up higher. I don't see. If it comes below that, might be one of the fake outs, like gives a fake out, then continue to go. Let's say dollar here. If it comes, you're probably wrong. don't come here. And let's see what price does. If it comes there, it's 230. If 330 reaches and we are still in this vicinity, I am taking off the trade. I'm usually giving them 1 hour or 30 40 minutes. We actually see the consolidation, then price like rallies up high, taking out those people who was short. What I want to see is price keep on rallying up higher, never coming to this low, and yeah. Let's keep on price, but I don't want to see price going like selling. No, I'm bullish. I'll actually see what price does. This is actually another block also. But let's watch it. I don't want to see it here, or rather, or come take out sell stops, then boom. Let's watch price. See, it's actually coming to that. Out of the euro, you see how the euro is just doing well nicely, rallying higher and higher, just as price action should be doing. The 3 minute it came back into the 5 gap to the 3 minute time frame. That's where price started now rallying up high. See how same thing I told you. Taking out those sell stops into that 5 value gap. It's too high, is that I want to see price coming to. See these by liquidity, these, yeah, 15, but I want to see also these ones. These are the best liquidity I want to work with. Price actually be bullish. The euro, see how price is. The XY and to see lower prices. You see how this gap is, it's just consolidating. Remember, there is no news. Yep, wrong. This is my favorite pair, but today it seems that it's telling us that yeah, we are actually not going to up high, but we are going to use the euro. But you see also the euro, it has declined. Always remember there is no news today. I'm waiting for price to take the sell side liquidity. See this resolution. Which will need some time. If it comes here, that will be the trade of the day, and just end it. There is nothing more to file off. This is not the only trade that we're going to take. But I want to see if price takes out these stops, I'll be comfortable, then end the live. But if it doesn't and continue running up high, we'll want to see. And also remember, today we have no news. Like there is no news today. So these consolidation, here the euro is just taking out small highs and getting up, going down, up, down, up, down. You see it? Yeah, it has done it. It was one good fake run. And yes, you saw those are the days that you will not. It's actually declining like no one's business. No news. Maybe we'll want to come to the York session. You see, we were wrong. And yes, the hourly. price is coming inside that fair value gap. We were dead wrong, is there? Oh, yes, we are wrong. See that fair value gap in the hourly? Smoothly. My, my. Can you see price declined, continued? You see, wrong. So price is going to come to this. Actually thought that was an SMB. Price came into that hourly fair value gap. What we were seeing at that time was the sell stop. So expecting prices to go here. See how the right told you anytime significant price move low is expected and it's with a measure of sell stops or buy stops being given out. This one for took the sell stop, boom. You see that fair value gap in the hourly actually didn't see it. Also here, and my model will say buy the middle opening price and sell above. So no model happened. This is on down candle, price expected it, then to now will this be now a stop hunt for buying opportunity? See this. Give it focus structure shift for price to continue. You see this stop run. What is a stop run in there? Oh now. You see that? Takes all those sell stops. Take out those sell stops, maybe now start to rally up at this bad liquidity. These are for, let's see, is it just a daily low? There is no. The hourly it has taken out that low to this. Now taking out that sell stop. Now this is a new high. Swept it. Sell side liquidity swept. If it's going to continue lower, I am not going to be a participant. Even you were probably wrong. But this, my model didn't pen. My model usually tells me you buy below the opening price. Like if you want to buy below the price. If you want to sell above the minimum price. You see here, this is actually another model that says if price is so bearish, buy the first retracement to the first. So it's a fair value gap. You see that also was a fair value gap at the 15 minutes. See this here. Price came inside nicely. Inside it. Touched it. Then see it came up so higher. Then started declining. How many pips are those? 20 pips. And you're wrong. Yeah, that's okay. You'll actually accept that. And that's a loss for today. And even this, if price continue being lower, I'm not going to be interested. I'm going to wait for New York or come back in a, you see this fair gap might actually be the entry again for sell stop. You see, that's that very in 30 minutes, then boom, now starts to decline lower. See it? Now we have took a losing trade, so I am not going to be, I'm not going to participate in another, because I know if I sit here I'll never go for another chance. But due to I don't want to force myself to take other trades, I'll leave it, then come back during the London session and accept our loss. So see, there is no economic event, but let me show you. I'm looking for the economic calendar. You see, there's no the only news for today, no economic calendar in the USD or the GBP. So our long trade, it was okay. Wednesday might be a good day. Thursday, best days, but I'm looking forward for Wednesday or maybe Tuesday. New York. We'll see if we will get something during those sessions. We have accepted the loss. We're going back home with the loss, and maybe see if we'll calibrate or get back some during the New York session, because we're going to see if we'll have more chances. We're not going to overtrade in this channel, just one trade per session, and see that price action kept us out. We're going to wait and see until we meet again. Adios, muchachos.